What is going on, everyone? Welcome back. We're going to be going over our 30-minute time frame today. As Friday, I just kind of left you guys in a hurry on, and we just kind of reviewed the larger time frames. We'll look at that again here in just a minute. But I did not give you guys destinations on that day, if we had an afternoon pullback low, single prints, things of that nature. We didn't mark them, and I didn't give them to you guys. So I'm going to go through it. I'm going to mark them on my screen. If you guys follow along, hopefully you guys will understand. I'll try to do my best to try to explain. And we'll just kind of review what happened on Friday. It was just a very strong trend day up. It is a textbook trend day up. And by textbook, I mean by holding single prints. For those of you that don't know what single prints are, single prints are basically, if you're looking at a 30-minute time frame and you're just looking at, let's say, if you're just looking at candlesticks, right? If you're just looking at candles, you're not really going to be able to see it. So if I put in candles, right, you're not really going to be able to see single prints. I mean, you can to an extent, but it's a little bit more difficult to kind of find where the single prints are located. It's it's a little blocky, not as clean. So where you would mark single prints, you can. It's just where gaps are located, right? It's like an intraday gap, right? It's where the market was squeezing pretty hard. But if you look at it in terms of bars, which is what I like to do, it helps kind of make things a little bit more clear, right? You can see where a candle opened, where it pushed down, and then where it closed, right? And then that kind of what's the word I'm looking for here? Signifies single prints, double S. So Friday, we opened up in the upper distribution from Thursday, right? So Thursday we had a double distribution. So anytime you have single prints, usually you end up with another distribution, right? It's where volume was accumulated and price was accumulated in one area, and then it gets distributed to a different area. So for Thursday, for example, all this volume up here, most of this volume right in here, but basically this entire range that I'm highlighting currently was the upper distribution. And to be more specific, it's from, hello, mouse. Okay. From that day's high, right? This whole area that I'm highlighting would be considered the upper distribution. All right. So all the volume, all the buyers that were up here buying, thinking that this market was going to go boom to the upside, obviously they started to get hurt. They began to get out of their positions. Sellers stepped into the market at that time and helped push this market down. So price got accumulated and then redistributed down here where buyers stepped back in, right? We were near a balance low at that point, or we had just created a balance at that point. We had a gap below that was holding up the market at that point. So buyers stepped in down here feeling comfortable, right? Anybody that was short, on this move down, they're covering down here, right? They're becoming the bid. They're becoming the buyers. Okay. So, and then obviously you have the innovator trader that's coming in, buying the market here, along with those that are getting out of their shorts, covering, right? And then obviously anybody that was shorting at the lows, they begin to cover too because they're not getting paid, right? That's what happened up here. Buyers, they weren't getting paid, so they began to get out of their positions, which caused this liquidation. All right. And you got to have context prior to that, right? Prior to that, we had been one time framing up several days in a row. The price just wasn't sustainable. We have poor structure all over the place on the downside, and now we have it on the upside. So when I say we opened up in the upper distribution on Friday, look at where we opened. This red line, we opened up in the upper distribution above single prints. Now, whenever you open above a set of single prints or below a set of single prints, depending on if it's an upside destination or a downside destination, in this case, it is an upside destination. And because we opened up above the upper distribution, right, those single prints get taken away, right? I mean, it's good to know where the lower distribution is because look at what happened. Oh, hold on. Look at what happened. Okay. Look at what happened. So we opened up in the upper, tried to find some acceptance, pulled back into the lower distribution, and we couldn't even get near that day's low. All right. So you knew, all right, as a seller, if you can't get near this day's low, there's no why be a seller? Why be selling at the lows? All right. So they cover, buyers step into this market. Anybody that was short gets squeezed out, and then we get this big pop in D period, right? So for those of you that don't know what market profile is, each time frame or each 30-minute time frame has a letter. Hold on, let me adjust this real quick. Has a letter assigned to it. And we'll make it blue. So each one of these has a letter assigned to it. Okay, so for instance, that was A period. This is B. This is C period. This is D period. So each, right, A through M. There are 13 time frames in the day. So A period, B period, C, D. Then you have E period, F period. And this just helps organize the data, right? You have G period, H. And that's all this does. It just signifies or helps simplify and, you know, organize the data. HI, then you have J, and then you have the three stooges, Curly, Larry, and Moe, as Paul likes to say, K, L, and M. Now on an actual profile, it automatically does it. So like if you're looking at something that has Window Trader or uses like Trade-of-8, things of that nature, their profile will actually, you know, spit it out in A's. So if you want to look at what an actual profile looks like, just look up Market Profile Window Trader, and you can kind of see what that looks like. But you can see how when we push down an A, B, and C period into that lower distribution, we popped up in D, right? Couldn't find acceptance down there. There was nobody wanting to sell down here. Buyer stepped in, boom, we pop up, squeeze. All right, now look at E period. We couldn't even get back to the opening, okay? So that kind of signified maybe sellers aren't that strong. Now we're finding acceptance in the upper distribution. We couldn't find it down here. Guess what? We're going to attempt to rotate higher and test the high of day, the previous high of day. You might be stuck in the mud here around the 4,400 level because there was a lot of volume done in this range, right? You see that high volume node right there? So maybe you get stuck in the mud there. But nope. We continue to push up, creating sets of single prints, okay? So after failing to push lower that day in A, B, and C period and find acceptance in that lower distribution, we begin to find acceptance in the upper. So your next upside destination was that high of day. And then if you got above that high of day, guess what? Your next destination is 44.2325, which was that monthly high, and that which would have stopped the one time framing down on the monthly if we got there, right? If you guys watched my video on Friday, you know what I'm talking about. And then if you took it out, that was also a weekly balance high. So now the weekly is one time framing up if you get above this, okay? So even more shorts begin to get out once you get above that level. So we have these upside targets. They become magnets and targets for algorithms and then players and traders that know where these destinations are. Now we created sets of single prints. Look at this. Once F period took out D's high, it popped up. Price never pulled back and filled in. You had no volume on that day, right? If you look on the screen right here, you can see where there was no volume done right there, right? No volume done. That just signifies how strong buyers were. They just pushed through the price points right there. Spent no time. So single prints created there. Then you had another set of single prints created here. Okay, so whenever you have back-to-back sets of single prints, right, that's just the distribution's continuing. Okay, so now at this point, you've created a lower distribution. Now you know where buyers accumulated. Oh, sorry about that. Now you know where buyers accumulated in this market. Buyers accumulated between D's high and C's low, right? So you had buyers stepping in down here. Okay. Then you had back-to-back sets of single prints, and we'll mark those now. So single prints were right there at 93. Then you had single prints here, or they started here at 50. So they become destinations to fill on the downside, right? You want to fill in volume here. That's called poor structure. Then you had another back-to-back set from F market. Hello. Okay, 99, and H's low of 25, 0625. So now you have sets of single prints. So you have a lower distribution established now. So anybody that was a buyer during this day did not want to see us pull back into that range, right? Did not want to see us pull back. They wanted to hold single prints. Now look at how we pulled back in H period. We held above both F set of single prints here. Okay. Let me get rid of this box. We held above F single prints, and now, we pull back in H. That's where you become a buyer on a pullback, okay? Now that you've taken out that high of day at 0950, your next upside destination is going to be 44.23. So when you got that pullback in H, that was your opportunity to buy. Now, you got to know where your out is, right? Where do you stop out at? You stop out below G's low, right? If you want to be a buyer, you buy 06, and then you stop out 97. Yes, you're risking a little bit, but right now you have everything in buyer's favor, right? You're one time framing up. What does one time framing up mean? It just means you're setting higher highs and higher lows, right? 30-minute time frame, higher high, higher low. This time frame takes out this high, right? Sets a higher high, higher low, higher low, higher high, higher low, higher high. And that continues throughout the day. You're just one time framing up. So buyers have that in their corner. You never got back to the opening. Buyers have that in their corner. You have single prints. Buyers have that in their corner. That just shows how strong the trend day was at that time. And yes, you can look at your 1 minute time frame. You can look at your 5 minute time frames, but you will not be able to see what is actually happening, right? You might be able to find an entry point, but it really doesn't matter where you're buying as long as you know where your out is and you're comfortable buying, right? You don't want to be a buyer up here at G's high, right? At 44.14.50, right? You don't want to be buying here. You want to wait for a pullback. That way, all right, you're buying 06 to get back to 14.50, right? Same thing here in H. You don't want to be buying at the high. You want to try to buy a little bit lower. Yes, I period popped up. You create another set of single prints. Now, this is where we created a second distribution. Okay, so we had the lower distribution that was created, 2 sets of single prints back to back. In order for you to create another distribution, you need to get at least 3 wide. What do I mean by 3 wide? You need 3 time frames to trade back and forth through the same price. So this is where 3 time frames traded back and forth through the same price. So from H's high at 1650 to H's low at 0625, you had 3 time frames that traded back and forth through the same price point, right? Price points technically being from 1650 to 14, okay? So this, and then obviously G and H traded the whole range of 06 to 1450, right? So I hope you understand what that means. So guess what? You create another distribution here. Boom, boom, right? You created another distribution. So buyers accumulated, distributed here a little bit, right? You had a little bit of sideways trading, and then you create another set of single prints. What happened? Once you got above H's high, anybody that was selling up here got stopped out. Buyers step back into this market. You have that upside target of 23.25. You create another set of single prints between 18.25 and 16.50, right? Set of single prints. You see how there's no volume trades right there, right? Set of single prints, okay? Then you create another distribution up here. You had 3 time frames, even 4 time frames that traded back and forth between 24 and 18.25 because we got to that monthly high, we got to that weekly balance high. So we obviously, you had anybody that did accumulate down here at the lower end, right? From that lower distribution on Thursday. And then whenever we were accumulating buyers down here in B, C, and D period, right? They're taking a little bit off the table up here. If you're a smart trader, I mean, especially if you're a day trader, you just went from, say you bought 77 or even 83, right? So from 83, let's just say from the open, get my tool out. From the open, and then you're selling up here at the target. You're 39 points in the money, right? You got a 2 or 3, 5 lot, 10 lot on that trade. You're making bank, right? You don't want to be the guy that doesn't take money off the table, right? You want to be the guy that's, yeah. You want to be the guy that's making money. You don't want to be the person that takes anything or gives anything back. Always, always take the money off the table when you have the opportunity. So, create another distribution up here. Okay, back to what I was saying. Created another distribution, and then we spiked up an L period above K's high. All right, above K's high, we created another distribution. Right, or we spiked up in M. So from L's high to M, that's a whole nother distribution. So I know, complicated, long, but now we know on the downside what our destinations are. We know what to look for, okay? Actually, I don't think I like that going. So I'm going to get rid of all these lines. We'll remark them, and hopefully you so that was a quadruple distribution day. All right. And then we got into that gap on the upside. I'm just going to get rid of all these marks. We'll clean it up, and then we'll just mark it on the way down. And if you don't like marking stuff on your screen, I mean, that's fine. Write down the numbers, right? But for me, I like looking at where things are. So we'll start from the top down. We'll start at the high. So we have the high day where the gap starts now at 33.50. High day where the gap starts. So this is, so we do have a little bit of a gap left. Gap starts there at 33.50. Then we have a set of single prints that start at 26.50. Okay, so these become destinations. Single prints become destinations to fill on the downside and signify distributions. Okay, so single prints start here. 11. Wait, what day was Friday exactly? 10. I don't know why I'm putting the 12th. I guess that's today's date. Well, boom, boom, boom. Label it that way. And then we have single prints that fill here at 24. 24. And I hope you guys are following along. And if not, you know, that's cool. I'm doing this for me. If you find any of this informational, then, you know, good. I like that. But for me, or it just helps reiterate destinations and what I could be looking for to take a trade off of come tomorrow, Monday. All right, we have another set of single prints that start here. Single prints, 11. And yes, I always date them because I like to know what date that was from. Otherwise, you're just kind of like, what, did we get this set of single prints? You know, it becomes very confusing. 1650. Single prints fill. Boom, boom, boom. Then you have another set of single prints that start at 0625. They get filled at 99 flat. Let me fix this one. Boom. And this is just how I mark my charts. I mean, it just helps me, you know what destinations and what price targets I can, you know, look forward to. So like on Friday, I got long on the pullback against that previous day's high up here at 0950. Okay, I was long up there on the pullback to go and get that high of 23. I made pretty good money on that. You know, I made a couple good points because that was the next target, right? Everything was in favor of the buyers at the moment. You know, I knew where my out was. I was accepting the risk. Yes, it would have sucked had it came back in, but I mean, you got to think about the context of the market. The market is trying to move higher, right? So I was very comfortable just taking the trade, and then, you know, kind of looking for that target. Now, not always are you going to be able to hit those targets, and not every day is going to be as strong as today was, or not today, but Friday was. But, you know, whenever you do, you just got to know when to put them on and when to hold it. Like Kenny Rogers, you got to know when to hold them, you got to know when to fold them. All right, so we got another set of single prints that start here at 97.50. All right. And then that set of single prints fill at, what high is that? 93. And then we'll go over some scenarios real quick. And I know this video is long. All my videos are freaking long. But they're very, I mean, they're in detail. They're in depth here. And if you're new to this style of trading, you know, let me know. If you like to, you know, learn more on how to trade a higher time frame. I found, I mean, my trading has improved significantly since I learned how to trade on a higher time frame. Don't get me wrong, I still look at the 1 minute, okay? But I think trading mostly off of the larger time frames, or at least to get to destinations, or to, you know, just reference some data, that's your go-to. All right, so this is what your chart should look like now, right? Obviously, if you want a clean chart, you can do all this BS. But me, I like my chart to look dirty. Kind of like me. Anyway, so here you have it. You have today's low at 43.67.75. All right, and then you have single prints that fill at 93, 43.93 and start at 97.50. I need to fix this one here. That should be 99 flat. And I don't know why I labeled all these orange red. They should be green because this is where you want to find buyers. Sorry. They should be, my brain is backwards as fuck right now. They should be green. Sorry. I don't know what I was thinking. Because they are downside targets, you want to see them hold if you are a buyer, especially when you get into these specific distributions. And I'll highlight them just for visual reference for you guys here in just a second. So let me restart. All right. So if you're looking here, you have today's high at 44.33.50. Okay. Single prints that start at 44.26.50, fill at 44.24. That is going to be where that set of single prints fill. So you have your upper distribution up here. Okay. This was also a price probe at 28.50. That's where the market spiked up late in the day. That's where the market spiked up late in the day. So buyers want to open above that level. Buyers want to open above 28.50. Okay. Then you have the, what is that? One second distribution on the way down would be from 44.24 to 44.18.25. Okay. That's where the next set of single prints start. So you have this very small distribution, right? If you were to pull back, you want to hold in this distribution here in the upper, right? You want to find buyers in this range. If you don't find buyers in that range, then you'll look to fill the next set of single prints that fill at 16.50 on the downside. And then you want to hold within this distribution from 16.50 down to 06.25. You want to find buyers in here. If you don't find buyers in there, then you're going to continue to rotate lower. Get into the next set of single prints that start at 06.25. They fill at 99. Next set of single prints that start at 97.50 down into 43.93. And then if you cannot hold above those levels, then you'll get into the lower distribution that starts at 93 and fills at 43.67.75 low of day. Okay. So there you have it, folks. That is 30-minute time frame, technical analysis using market profile on on TOS in a nutshell. Yes, it was long. Yes, it was lengthy. We got through it. Hope you understand. And then just briefly, let's go ahead and look at the larger time frames and kind of reiterate our everything that we have going on currently. Just, for shits and gigs. Why not? Why not? Can't hurt, right? This video is already long enough. Let's continue. So we have a monthly balance now. Okay, we took out last month's high, right? We've been one time framing down, meaning we're setting lower highs, lower lows on the way down. The only way you stop that is to take out a previous time frame's high. That's on any time frame, right? When you're looking at the monthly, if you're one time framing down, you need to take out a previous time frame's high. If you're on the weekly, you need to take out a previous time frame's high, or the previous week in this case, or in this case the previous month. So we stopped that by taking out previous month's high. Now we're in a 3-month balance. Okay, so from 45.62 balance high to 41.2250, you can expect a pretty large chop until we come out of balance on the upside right here at 45.62. Okay, if we take that out, then you'll look to continue to push up higher. The only way we can do that is if the lower time frames continue to move up higher by going, one time frame up, balance, one time frame up, balance, continue in that fashion. So monthly in a balance, chopping around inside that. This is what the weekly will look like inside of that range, right? Essentially, your resistance here, support here, right? I mean, if that's the way you want to look at it, okay? But now the weekly is one time framing up. That's what the monthly or the weekly looks like with inside that monthly. Weekly, now one time framing up. Now that we've gotten above that weekly balance high at 44.23, last month's high, next upside destination for the weekly time frame is 45.1450, okay? Now there's a lot of work on the upside to get done in the lower time frames, but in the weekly, you just got to get to that target of 45.1450. That is your next upside target on the weekly. As far as our daily goes, as far as our daily goes, we have officially broken out of balance on the daily. We were in balance for 1 day. Okay, we were in balance for 1 day. We are now above that balance, looking to fill this gap. We have an upside gap that fills at 44.4350. Once we fill that gap, we'll look to take back this large trend day back from September 20th. Okay, so on the daily, first stop is 44.4350. Next would be that high day at 45.0750, and then ultimately that weekly high at 45.1450. Okay. We are firmly above the 50, above the 20, above the 200-day moving average. Now we do have several gaps, okay, on the downside. We have 1, 2, 3, 4 gaps on the downside. Most recent would be these last 3 here. We're inside of that gap from that gap down from the 20th. You're looking to fill that, and then you do have an upside gap at that point above that monthly balance high. Okay, so there's a lot to get done here for the buyers, but we can still continue to push up higher going into the end of year. So bulls have a lot on the plate here. Sellers, they obviously want to defend that 20th push down, but right now does not look so good. Volume needs to pick up for the buyers. We'd like to see more volume on the upside. We've been doing just right around average, not a whole lot of volume going into the end of the year, so we'll see how that plays out. Thanks for stopping by. If you guys made it to the end of this video, please leave a like. Like I said, this is more or less for me, but if you enjoyed it, please leave a like down below, comment something. And if you're new, subscribe. Hope you guys enjoyed it. Have a wonderful weekend. We'll catch you guys in tomorrow's video. See ya.